You're listening to AI Prism from Seoul Economic Daily.
9,114, 2.55 trillion, 38.48 trillion. It's Tuesday, June 23rd. Here's what today's story could mean for the Korean market. Right, so today we're pulling from Seoul Economic Daily reporting to explore, well, a pretty massive paradox on the hashtag KOSPI.
Yeah, it's definitely a paradox.
Exactly. I mean, our mission here is to figure out why a market hitting absolute record highs might actually be flashing severe structural warning signs.
Right, and to see that paradox, you really have to look at the massive shift that just happened at the very top of the board.
Yeah.
I mean, for the first time since November 2000, SK Hynix has actually dethroned Samsung Electronics.
Wait, to become Korea's most valuable company?
Yes. Exactly. It is up 348% year-to-date. That hits a 2,080 trillion won market cap, which, is roughly 1.49 trillion US dollars.
Oh, wow. I understand they dominate high bandwidth memory, right? The specialized memory stacks NVIDIA needs for its AI accelerators. But is that alone enough to justify a 348% jump?
Well, no, not entirely.
Right. I figured there has to be a specific financial mechanism driving this valuation right now.
There absolutely is, and it revolves around their pending Nasdaq ADR.
The American Depositary Receipt.
Right. An ADR allows U.S. investors to buy shares of a foreign company on a standard U.S. exchange. Currently, massive, passive U.S. index funds just can't easily buy SK Hynix directly in Seoul.
So an ADR basically opens the floodgates for all that institutional money.
Exactly. So traders are currently pricing in this re-rating premium. They are bidding the stock up today, betting that a massive wave of forced U.S. buying will push it even higher tomorrow.
But this brings up that 9,114 record close on the hashtag KOSPI. I mean, standard indexes are market cap weighted, meaning bigger companies exert massive gravity on the overall score.
Yeah, they totally skew the picture.
Is this like, say, a town bragging about a massive surge in average income, but it's only because 2 billionaires just moved in while everyone else actually took a pay cut?
Now that captures the distortion perfectly, actually. Standard indexes really hide the underlying weakness. If you look at the KOSPI 200 equal weighted index,
which treats every single company exactly the same, regardless of size.
Right, exactly.
Huh.
That index actually fell 4.83% during the week of June 15th.
Wow, fell nearly 5%.
Yeah, and at the exact same time, the headline index jumped 11%. If you strip out SK Hynix and Samsung, the broader Korean market is actually down 2.48% this month.
So the vast majority of stocks are just losing ground.
Right, which makes the foreign outflows we are seeing incredibly alarming.
Yeah, foreign investors really aren't buying the broad market. I mean, they dumped 2.55 trillion won, which is about $1.82 billion, on Monday alone.
They are definitely selling into the rally,
leaving retail traders to hold the bag. And retail is getting insanely aggressive. Look at SK Square. It surged 66% in 8 days, not because of its core business, but simply because it holds a 20% stake in SK Hynix.
Yeah, traders are just treating it as a leveraged halo trade, like a cheaper way to bet on Hynix's success.
Right.
And that aggressive retail risk-taking is spilling directly into single-stock 2x leveraged ETFs. Korea's Financial Supervisory Service chief recently called the launch of these specific funds a mistake.
A literal mistake.
Yes, citing 92% retail participation and turnover rates hitting 200%.
Wait, I need you to clarify something here. I know leveraged ETFs are risky for the person holding them, but how do they actually make the underlying market more volatile?
Good question.
Like, how does an ETF shake the foundation of the stock itself?
Well, it comes down to a mechanism called daily rebalancing. To maintain that 2x leverage, the ETF fund managers have to continuously adjust their exposure at the end of every single trading day.
Okay, so if SK Hynix goes up,
the ETF is mechanically forced to buy more of it to maintain the 2x ratio. And if the stock drops, they're forced to sell.
Oh, I see. So you have billions of dollars basically blindly buying high and selling low every afternoon.
Exactly, which creates this artificial whiplash effect on the stock's actual price. Add in the all-time record of 38.48 trillion won, or $27.5 billion in retail margin loans, and the entire system becomes a powder keg.
So what does this all mean for you? Institutional money is actively trimming into a 9,114 record close, leaving heavily leveraged retail traders waiting for an ADR catalyst that remains entirely unscheduled. Beneath the surface of a two-stock illusion, the broader market is losing ground as 2.55 trillion won in foreign capital flees. With retail margin debt hitting that record 38.48 trillion won, extreme concentration is masking immense vulnerability.
Which leaves you with a critical question to consider for your own portfolio. With the entire market's fortunes balancing on just two companies, record retail debt, and a pending ADR listing, What happens to the broader economy if the AI supercycle experiences even a temporary delay?
That's today's AI Prism, stock investors. This deep dive was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Eifer award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.